Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Friday, October 28th, 2011. Let's get right into the charts here. Futures are just down 6 points this morning after yesterday's gigantic mega rally. The S&P 500 finished up 42 points yesterday. Dow Jones Industrial Average was up 340 points. And you had the NASDAQ up 87 points yesterday. So it was just a tremendous move on the European bailout news. But more important than that, it was really a U.S. dollar index decline. So I know everybody rejoices over the market rally, but the truth of the matter is, all you have to do is look at the dollar yesterday and see how that thing fell off, and it's very, very close to approaching the August lows. But the dollar, since topping out on October 4th, has really been in a waterfall decline, and hence the markets have been in a mega rally. Now the dollar is down sharply. Yesterday you get this huge pop. So again, the negatives to a dollar being down, I know a lot of people don't realize it, but the negatives are that all the goods that you purchase are more expensive. So unless you're outperforming the stock market, believe it or not, if you're using dollars to buy oil, oil is more expensive. If you're using dollars to buy copper, copper is more expensive. If you're using dollars to buy sugar or wheat, they become more expensive. Everything becomes more expensive. Food prices, products will become more expensive. Everything becomes pricier. Your buying power buys you less, and that's the negative to the dollar. But nonetheless, dollar down, market up. That's how it goes. That's how it's been going really for 10 years. So again, we'll see how this all plays out. Today you have the futures down about 6 points. You can see yesterday's mega rally. Look at the daily chart here. And you can see how the market traded really sharply higher, just really broke right out to the upside today. We're seeing just a slight little shallow pullback, nothing dramatic at the moment. Now here's the catcher. Here's really what everyone has to think about. Yesterday's news about the $1.4 trillion European bailout. Really, there's no real knowledge of where the money is coming from yet. That's the funny part about this whole thing. It's just saying that, yeah, we're going to do a bailout of that size, but we don't know really where we're going to get the funding from. You almost have the French president, Nicolas Sarkozy, on his knees begging China to come in and bail out these markets. However, the Chinese haven't really agreed to anything, and they've been known to pull out more often than not. I don't know why they would make an investment in an insolvent nations. We'll have to wait and see how this all plays out. But nonetheless, it's pretty amazing how the markets just can rally up on this kind of stuff, and there's really no way of knowing exactly where this money's coming from. In fact, Italy auctioned off, I believe, 7.9 billion euros in bonds, and really had very little demand for those bonds today. You have Spanish unemployment reaching the highest level in more than, I believe, 15 or 20 years today, something like 21.5%. These are the two nations you have to be worried about. It's not Greece. Greece is a small island nation. It's really not that big. So what if they gave a 50% haircut to the bondholders there? That's not a big deal. So they get paid 50 cents on the dollar. The truth of the matter is, what do you do with Spain? What do you do with Italy? What do you do with France? And Germany GDP is 80% of gross national product. That's not that great either. So again, this is going to turn out to be a bigger story down the road. Maybe they've saved the day for the next couple of weeks, but the truth of the matter is, this is far from being resolved. And I'm not looking to sprinkle salt on anybody's wounds here. That's in Europe. But the truth of the matter is, the countries are insolvent, and that's what it's going to come down to. So this will linger on for years and years. I guess just the same way in the United States we could just print money and bail it out. But the truth of the matter is, there's big problems down the road still. Okay, so in any way, that's why we look at charts. You got to price action is king. Yesterday the markets rallied, and that's the bottom line. Right now you're looking at the futures, just down 5.5 points. You're going to have personal income data coming out in just about a minute. I believe it's out now. So personal income data is out at the moment. Looks like September personal income up 0.1%. September personal spending up 0.6%. That's the more important number. So the central banks need people to spend money. The U.S. consumer is about 70% of GDP. So they need the U.S. consumer to spend money. That's really the key number. Not really moving the needle all that much today. So we'll see. There's consumer confidence, I believe, out at 9:45 or 10 o'clock today. I don't really think that's going to do all that much either. Let's get back into some stocks that are in the news today. One is Chevron, CVX. Okay. Stocks trading around 108.50, closed yesterday at 109.26. Not a big deal. It's really been all over the map. I don't want to make too much out of it. Let's take a look at Merck. Let's take a look at Merck today. Merck is trading up a little bit there, 35.20. So Merck's having a little bit of a move. I believe earnings came out. Whirlpool, I believe, laying off 5,000 people. The stock is getting hit. So the stock is trading down at 54.24. Stock closed at 60.47. So earnings came out on Whirlpool. I don't see a lot there. $60 is a big resistance level. The stock is sold off sharply. If this stock starts to break the lows, watch this thing go down to 46. You can nibble there at $46 on the long side if you want. But not a pretty move for Whirlpool today. And they are going to lay off 5,000 people. Here's a stock that's doing well. Goodyear Tire. Pretty good little pop there. Stock is trading higher. I believe there's earnings there as well. Baidu had earnings after the bell yesterday. Stock's getting a good reaction. Solid move. You can see after the bell, holding up pretty well this morning. So Baidu's holding up fairly well. A little extended already. This 150 level, big resistance, maybe 151, 152. Not sure it's going to trade much higher than that. So be careful around that level. Do not look to jump on board that name. In sympathy to Baidu, you have Corp. Corp is trading slightly higher this morning. We'll see where it goes. China was up last night. The Shanghai index was up last night, I believe 1.4%. It's a decent move, but it's nothing what you would expect after the mega rally in the United States, in Europe, which was up 6%. The U.S. markets were up about 3%. China only up 1.4%. Starting to lag. Be careful there. Let's take a look at Deckers. Deckers had earnings as well. Nothing tremendous, nothing terrible. Holding steady. I can't make too much out of Deckers. Stock is in an uptrend on the daily chart. Looks okay. And it's trading up a little bit. So nothing bad there. Stock is in good shape. Here's one that's not in such great shape. Ticker symbol GTU. And you can see this thing is getting hit pretty sharply this morning. Trading at $66. It's going to have a little bit of support at 64 and then some more support at 62. Watch this stock. It's very weak today. This thing could flush a little bit. I wouldn't be surprised to see this thing go down to 62 or maybe 61.50 area, in between that. So be careful there if it does fall. That's what I'm seeing, at least at the moment, if it does trade lower. Here's an Indian ADR that is having a good morning today. Tata Motors trading up by about 50 cents. Again, this is a nice move for the stock, but I just don't trust it here at these levels. I think it's a little bit frothy, and I know we have a lot of people who look at this name, but just be careful here. Tata is a little bit extended on that daily chart. I'd like to see it pull back first, again, before making another move. So that's what I'm looking at this morning. If you want to look at gold, you're going to see gold is down a little bit. The USO is also down just a touch. It looks like spot crude is down a little bit, and the dollar, obviously, if oil and gold are down, the dollar must be up a little bit. The U.S. dollar index futures are trading higher by 15 cents, although nothing great. I mean, they've just been absolutely massacred, and this is just a little blip in the screen today, so nothing great there on the dollar. But the dollar goes up, the market will deflate. If the dollar moves down, the market will deflate. Here's something to think about before we step off, some food for thought. What happens if the dollar starts to break down to new lows? Where is the confidence going to be in the world reserve currency? And that's something that the Fed probably is thinking about as well as they play yo-yo with this U.S. dollar. But that's something to think about as the dollar continues to go lower. If it breaks here, really the next move is going to be down to around the 70 level, and that's the last line of defense. It breaks through 70, it's lights out for the dollar. And we can only imagine how much inflation the world will be facing at that point. But we'll see. We'll cross that road when we get there. With that said, everybody, have a great Friday. Those of you in the chat room, we'll see you on the microphone at 9:30. And take care, everybody. Have a great weekend. We'll see you on Monday.